minutes. Sorry, we are here with FXRate.com team, and hopefully Yohai will join us soon. Uh, we are waiting for the minutes of the latest FOM decision from the January meeting, right? And although we are not expecting much of a surprise, I believe that the main focus will be in any hint regarding the future use of the word patience, if they remove it, if they keep it. In fact, any clue about what or when the Fed movement. Hi, Yohai, there you are. Welcome. We have some technical issues and started a bit late, but hello, how are you? Hi, nice to see you again.
I can't hear you. Let's see if there's something.
I can hear you. I can hear you fine. Do you hear me, Mauricio? Tell Yohai I can hear him. Hello, can you hear me, Yohai? Anyway, so as we don't get bored. Okay, great. I was saying hi, how are you? And welcome.
Hi, I'm good. Looking forward to the minutes.
Okay. Yeah. I would say that there's not going to be much of a surprise in these minutes, and I do believe that the main focus will be in the word patience, right? What the Fed do with the new the new mantra they made in the January meeting, whether they keep patient, remove patience. Yes. What's your view?
Well, I think there was a consensus about keeping the patience on the rate hikes. I don't think we're going to get much more on that. I think they're going to keep that for the March meeting. I'm looking for more indications about what they said about international developments last time. They expressed some worries about what's going on in the world, and maybe we'll get some more information about that and see how worried they are about other areas in the world and about the strong US dollar. So that's what I'm focusing on.
Okay, I do expect that we are going to see not much there, but again, as I said, patience, and for the most remark again that the employment is doing good. I do believe that the latest bounce in oil with crude back above 50, at least it's given some relief to the Fed and to other central banks about the pressure oil was doing in inflation, right? And deflation. Anyway, I was looking at the euro dollar. I have a trend line coming from this year low, the 10.97, in fact, an 11-year-old. But anyway, I have an ascendant trend line there, and we are pressuring below it. In fact, the pair has been pretty much sustained or finding buyers in dips towards 12.50, 12.60 ever since the month started, right? Late January. So that's for me the critical level to take. If somehow the minutes are extremely hawkish and dollar bullish, right? Which it's a small chance, but anyway, this is the level to take down to see further dollar strength against the euro. Okay. Anyway, I believe that we have also the other swap drama. We have the Greek situation, and until we don't see a solution in there, whether it's being a new law and an agreement or the final exit of Greece, we are not going to see much either about it, right?
Yeah. I think we just had news from the ECB that they are continuing their ELA, their emergency liquidity assistance, and that means that they are not pulling the plug on Greece, if you wish. And in general, the ECB is not participating, not playing a role this time, but leaving it to the politicians. And so the focus returns to the battle between Germany and Greece.
Yeah, so I don't see the ECB pulling up the plug out of Greece, meaning that will be a declaration of a Greek exit, right? So they can do it at this point. They have inverted too much money there already to pull the plug at this point. They will lose everything. Germany also, and all the countries in the euro area that actually loan money to Greece.
Yeah.
But anyway, that drama is still pending, and I do believe that it's restraining any kind of directional move in the euro dollar for now. But what I'm also seeing is that the Swiss is it lows after the S&B surprise last month. We have the euro Swiss at above 0.700 and the dollar Swiss around 94.50. Both pairs are at their highest and continue rising, which also weighs in the euro, right, Ben?
Yeah, the Swiss National Bank said that they will continue intervening as necessary, and I think it's weakening the Swiss franc and of course helping the euro just a bit, not too much as it did in the past, but it's a factor and it supports the euro. Apart
Yeah,
from some good news we had from the eurozone. Well, I think the minutes are out, no?
there are minutes are out. Dollar is strongly down across the board. I'm not seeing much of an information, but seems the commodity currencies are picking up fast. Although this is the first reaction, so beware, guys. Anyway, pound is breaking previous high. That should trigger some stops and see the pair rising farther.
Yeah, headline I'm seeing here is the FOMC minutes. Many Fed officials thought premature rate increases might damp apparent solid recovery. That means they are very, very patient with rate hikes, and that's dovish.
Yeah, yeah. Fed officials inclined to give rates near zero for a long time will mean that the dollar has not much of a chance right now. Okay, the strong recovery extends in commodity currencies. Pound may extend up to 55 if we continue in this zone, mostly due to its self-strength, right? If I have to go against the greenback somewhere, I would rather go with the pound dollar because the pound seems to me the strongest currency across the board these days.
Pound enjoyed some relatively bullish meeting minutes from the MPC earlier today. They said that they expect inflation to sharply move higher after the effect of oil prices moves away. And in general, they are seeing through oil prices, bullish about the economy. We saw another fall in the unemployment rate.
Yeah,
So the
wait,
pound sort of stands out against the dollar when.
see, lower for longer. The Fed, I'm reading about the Fed, but what you say about Bank of England minutes, it's right. Unemployment figures, wages were above inflation for second month in a row, which is pretty positive for the United Kingdom at this point.
Yeah. Yeah, but regarding the minutes from the Fed, currently, well, the dollar is weaker,
Yeah,
um, but not. I don't think it's so dramatic so
no,
far.
it's more dramatic against Aussie jumped the most across the board, but not much. I don't see much of an upward potential in the euro unless we finally bridge that area around 1440, 1430. The pair have stalled in between these levels for most of the last 2 weeks. So, uh, and even though, as I said earlier, I believe that there's not much for the euro dollar until we have some clear picture of what's next for Greece. That situation. Uh, I'm
Yeah.
not sure, but
Yeah. Well, the Fed is also talking about international development, something they noted last time. Um, so they noted risks from China, slowdown there, Middle East. Well, we know there are insurgencies, Ukraine. Well, the ceasefire doesn't really hold. Greece, of course. So that's sort of kind of a shopping list of all the problems in the world.
yeah,
And of course, everything has an impact eventually, but Also, I don't see that as, I mean, such a strong negative dollar impact.
I'm checking if they do something with the word patience, but anyway, it's not necessary because this period of stance lower for longer. It's telling us that maybe the first rate hike will come with some luck in the second half of this year. We are anticipating no rate hike in June with this statement, right?
Well, I actually think there's still a chance of a rate hike in June. A lot depends on, as always with the Fed, on economic data. Everything is data dependent. In general, even though these minutes are more dovish and they counter the relatively hawkish statement, it's important to note that the meeting was made before the recent non-farm payrolls report, and that was actually quite positive. So I think if we get another good labor report in the beginning of March, it should be okay.
Okay,
Quite a lot of noise.
Hopes of a rate hike will depend on how the next employment figures came out. That's what you're saying. How we end this February from that employment side. Sorry, I was reading that there's a question about what to do with the euro, aid or sell or buy. And the fact is that I wouldn't be, as I was saying, there's not much to do with the pair in the middle range. I'm not a happy seller, neither a buyer of the euro dollar unless we break above 1440 or at least take the 1310 level down, right? We're in the middle of nowhere in here, and the uncertainty is keeping the pair in a tight range. So if the price advances, maybe I will be a seller around 1440. But at this point, it's not a sell, neither a buy for me. Okay. If I have to trade something, I would rather go with pound, as I was saying. It's far more interesting we have 1, 2, and a new drop higher now after breaking this previous high with this news. So I will go for a break towards an upward continuation towards 55. Sorry, as I was saying. But honestly, I'm not a big fan of the euro right now. Okay, the Aussie is accelerating higher and about to break 78.30 also. That's the critical resistance level to take. For once, gold is also bouncing after holding note 1200 figure. So for the pretty much that's it offering the market. Yeah.
However, if somebody Mr. Structure Chen is asking out for explaining about the implication about the stay at zero. What is the implication to be longer to the US dollar?
What are the implications of being long in the greenback?
Yeah, well, no. What is the implication for the Fed to stay longer with zero rates?
Okay.
What is the implication of that in the currency? You can explain what.
Well, that will mean for the first thing a lower greenback across the board. Okay. And I hope I do believe that the Fed has been maybe excessively patient because at this point this economy that's going more growth, one that is growing fast compared to the rest of the one. But in fact, I do believe that it's a form of filtering the low inflation levels the country is having these days, right? So that I do believe that the attempt of boosting a bit inflation at this point, maybe one of the reasons why they decide to keep rates lower for longer and go back to that point not with the enthusiasm we see earlier in this year of rising rates sooner. Most of the central banks at this point are blaming the strong slump in oil to the deflationary pressures, but we all know that it's not just about oil falling what is causing deflation, right? It's the lack of growth among all the other major economies. So I hope that one of the implications of keeping rates lower at this point will be helping inflation to recover from the current inflationary risk it's on. Okay, and of course, send the dollar lower across the board.
So
And
that's why the euro dollar is right now over 114.
yeah, it's testing 114.
Then
I don't know what do you think, Yohai, about this correlation in between low rates, inflation, and what the excuse of oil everyone is using these days.
Yeah, well, the Fed always said it doesn't look at the headline inflation, it looks at core CPI, and even more importantly on the core PCE price index, which is another very specific figure. Now, these are much higher than CPI. They stand at about 1.3, 1.4, of course CPI even higher, sorry, but it's still not
good enough.
There's no pressure. Yeah, it's not good enough. It doesn't put enough pressure on the Fed to hike. Another factor that has just made a comeback recently is wages. Wages are behind core inflation as well. If people have more money, they spend more, not only on buying petrol, gasoline. So finally, in the last report, wages went back up, but it was only a comeback after a fall. So the Fed. So here's a reason for more patience until they see wages really picking up month over month, like jobs are picking up month over month. There are no rush to raise the rates. So
yeah, exactly. That's the point. There is no need to raise rates at this point with inflation low and wages subdued, right?
Right. No pressure.
somebody asking about the outlook of the euro.
I hear
what is
you
it?
low.
I can hardly hear. There's lots of noise.
Yeah, I can hardly hear you either. I will let him know, or try to. Yes. Explain FIDA zero interest rate implications. That's what you're asking. I do believe that we cover it all. But what? Yeah,
Yes,
and now.
yes. Are you listening?
Yeah, now I hear you.
Okay, nice. So there is somebody asking for the euro pound.
Yeah. Here we are, the euro pound breaking to fresh multi-year lows, right? And in fact, it was trading in between a channel, an horizontal channel, but it break below it, and it's now pulling back, making a pullback, sorry, towards previous lows, but remains below it. As I said, as we were commenting earlier with Yohai, there's a strong imbalance of strength between the euro and the pound, right? The pound seems much more stronger than the euro, so my personal view is that the pair will continue falling. I see it close to 0.70 in the upcoming weeks, meaning the movement is usually slow in the euro pound because most of the euro and pound, we all know, trade more or less in parallel. But the euro pound is the clear reflection of the imbalance between the two economies, right?
Monetary policy divergence at its best.
Yeah, exactly. Pound, the United Kingdom is in far better shape, and so does pound and euro pound. The only thing that can trigger some short-term recovery in euro pound, I mean really short-term, meaning that it will be temporal, is a sudden and happy solution for the Greek problem in Europe. That will probably boost the euro on its own temporarily, but anyway, I don't see much of a strength because once we are done with the Greece issue, keep in mind that in March the ECB will start with quantitative easing, right? With the start of the stimulus plan, they would start injecting liquidity into the market, and they would be looking to put the euro send yield lower to make it cheaper. So uh, if I have to go somewhere with euro pound, I will go to downside, right?
Yeah, I agree. Eventually, a weaker euro is good for the European economies, and it will help them push inflation higher, improve export growth, and eventually strengthen the euro. I think it'll happen later in the year, but we're still not there. Once the ECB indeed begins printing, the ECB will buy bonds. The money from the bonds will go partly into stocks, partly into the real economy, but partly outside the eurozone. So
Exactly.
I think we can expect the euro to fall.
The euro is. Sorry, I didn't hear you. Your high. You say the euro is what?
Well, I
Okay.
think that
Okay.
once.
Sorry.
Sorry.
I mean, I was not hearing perfectly what you were saying. Once the ECB starts launching quantitative easing.
Oh, yeah. Once they begin quantitative easing at the beginning of March, the money from the ECB goes to bonds. The money from bonds goes partly to stocks, partly to the real economy, but partly outside of the eurozone, and that could further weaken the euro. And in the UK, the Bank of England really ignores the fall in prices due to oil, and is set to raise the rates later this year. So I also see more potential for euro pound to continue falling.
Yeah, exactly. Exactly. Yeah, well, mostly we agree what we were saying.
Yeah.
Okay. Stocks are bouncing from their lows. Gold is bouncing but still shy, meaning it's still below the daily high. Not much action in there. And oil remains pretty much unchanged after news. But when it comes to currencies, the dollar spiked lower. Now it's trying to recover some ground. The euro wasn't able to take the 14 level, mostly because of, again, Greece. The only issue there is Greece. We are not going to see much until that's solved. And the dollar Japanese yen tested in fact, tested this current 1880 level, which is like the support, the immediate support. We break below briefly, but recover it. So that did the OC with the 7830 level. So not much of an action in there. The only one at higher highs is the pound, right?
Yeah, there's an interesting development in the Aussie-Kiwi cross. It continues falling, and the meeting minutes also help it fall. Let's see if I can
Okay, guess the worst is over. I guess we are not. We are going to see some of consolidation around the levels post news right now, and I do hope we see more action now later in the day in the Nikkei opening. In fact, it will be already tomorrow, right?
Yes, Valeria, why you don't tell us about Pacific currency like the New Zealand dollar and the Australian dollar? Right now we're watching the New Zealand dollar trading at like almost 1 month high. What is your thoughts on the New Zealand dollar?
I'm not sure if I understand what you mean. What do you see in commodity currencies, in the Aussie, in New Zealand, or the CAD?
Yeah, what is your thoughts on the New Zealand dollar? The New Zealand dollar right now is trading at 1 month, nearly 1 month high. So,
Yeah,
what is your thoughts?
the fact is that I'm not following much this particular pair, but I believe that it's mostly a corrective movement. Although the forward chart is showing me that we are trying to break above the 200 exponential moving average. Usually, it's a strong sort of line in the sand for bearish and bullish trend. I would like to see a pair recovering further, maybe above the current levels around, I don't know, maybe above 76 to talk about a deeper upward movement in here, right? But for most, I do expect commodity currencies to remain subdued. There have been strong falls in commodity prices. Metals are in trouble, so I don't see much of a drag in here. Temporary, yeah, short term, but
The kiwi stands out a bit because, contrary to Canadian oil or Australian iron and copper, New Zealand exports milk, and in the past 3 or 4 auctions, the price of milk actually went up in the GDT, the Global Dairy Trade Price Index. So also Kiwi retail sales have been strong, employment data has been strong, so I think the Kiwi could stand out a bit, at least against its peers, especially against the Australian dollar.
thank you. Thank you. I don't follow much New Zealand news, so sorry for that.
Yeah, no.
I have been out of the hook with it lately. Not paying much attention for Kiwi.
Yeah.
Moments in life when the brain is outside everything.
Yeah. I'll mention something about the FOMC meeting minutes regarding the dollar. They say that the increase in the foreign exchange value of the dollar was expected to be a persistent source of restraint in US net exports, and a few participants pointed to the risk that the dollar could appreciate further. So they acknowledge it, but they don't seem too worried about it, or most people don't seem too worried about it.
Anyway, we know that central bankers being worried about the strength of its own currency has never been an issue for a certain trade, right? It has never been a cause of retracement in a strong currency movement.
Yeah. Another thing from the minutes is policymakers want more evidence of continued growth and signs of inflation picking up before a liftoff. So basically, yeah, this goes hand in hand with the patience attitude.
Okay, yeah. Okay, something's in here. Let me see. Okay, I don't know what. Where do you see the dollar to British yen advancing back to 120, or do you believe that that's the most we had of it? I'm watching there's sort of a head and shoulders in here developing. I didn't see it in the 4-hour charts. I know the most need one, but now I see with 1820, 1830 being the neckline.
Yeah, I see what you're talking about. I see, I mean, after a period of consolidation, I do think that dollar yen will continue higher. Not as fast as it went for the past 2 years, past couple of years, but there is a potential for more upside.
I do believe it, so yes, we have to check this post Bank of Japan meeting highs post earlier today around 1940, right?
Yeah, the Bank of Japan made no change. Was expected to decide. In the past, they surprised the markets.
Yeah,
and they have
further stimulus would be counterproductive, right? Last week.
Yeah, they fear that a weaker yen will already be counterproductive, especially if oil prices have already reached the bottom. They have to find other ways to grow their economy, not only weaker yen.
So there is T7 27 is asking if we can call for a button in the cable with the GPY USD confirmed uptrend. What do you think, guys? Factor in the short term is
The bottom in cable?
Yeah, in the cable.
Cable.
Yeah, go ahead, Larry.
I do believe he was saying.
Well, regarding cable, I think we do see a bottom. I mean, there was some kind of fear that because of slower growth and slower and very low inflation in the UK, the Bank of England would not raise rates. But in the past few weeks, we got a few more positive signs from PMIs and some hawkish indications from the Bank of England, especially with their inflation report. So I think we've seen the bottom, and I think it'll be a close fight between the Fed and the Bank of England of who will raise rates first. But I don't see. I see the U.S. dollar strengthening more against other currencies. To be cautious.
I do agree with you. I don't believe that. I don't believe this is the end of the dollar strength.
So, do you think it's like a short-term bearish in the US dollar, but in the long term, and the main trend is bullish dollar?
I think the dollar has more room to rise, especially against the Australian dollar, against the euro for a few more months until things turn around, and maybe also against the Canadian dollar because we're seeing some weak signs of the economy. But I'm not sure that oil will fall much more. And I guess the dollar could rise more against the Japanese yen. But against the pound and the kiwi, it's harder to call. I mean, both currencies both have good fundamentals with the dollar, so I don't see the greenback rising much against the pound and the kiwi.
Yeah,
Okay.
pretty much what I said earlier. If you have to go against the greenback, go with the pound. And well, as you said, the kiwi now. But if you have to go with the greenback, go against the euro or the yen or the Aussie or the weaker ones.
Okay, guys, use as recap. What is your thoughts? How the people has to understand, be ready for the action session and tomorrow session? Use as recap.
For me, what we got here today is yeah, indeed, a more dovish than expected Fed, but it does not change much the whole picture about the U.S. being maybe the stronger economy in between the major ones, and that means that the dollar decline that we are seeing now may be quite temporarily, particularly as key resistance levels were not taken out. I believe that the Fed is trying to cool down expectations of a rate hike rather than anything else to avoid an over-appreciation of the greenback for most. And as I said before, I believe that the euro is going to do little, the euro-dollar pair, I mean, until we have a clear answer from Europe, which in my humble opinion will be that Greece will remain between the eurozone. And that will trigger just a temporal spike in euro dollar, maybe as much as 116, maybe. But anyway, it won't be temporal. It will be temporal because of quantitative easing being launched next March. So that's pretty much what I'm taking out of this.
Yeah, I certainly agree. Regarding Greece, yeah, I also think they'll stay in the eurozone, and once things calm down, it could happen tomorrow or after tomorrow, maybe in the last moment next week. But eventually, I think things will be okay. But it'll be enough only for a temporary spike. Regarding the minutes, and we've seen many times in the past that the minutes took the other direction from the statement. So if the statement seemed somewhat bullish or hawkish, so the minutes are a bit more dovish. I think we've seen that a bit now, especially. And another thing, we should take it a bit with a grain of salt, because since the meeting we had the excellent non-farm payrolls, and that's one of the Fed's mandates. So the minutes are a bit stale in that sense. So, okay, the minutes are a bit dovish and we're seeing a weaker dollar, but yeah, it doesn't change the general picture. The US dollar is still what's called the cleanest shirt in the dirty basket or something like that. And I foresee a bit more dollar strength.
Okay, okay. It has been great to be here with you all, guys. I hope you enjoyed it as much as I did.
Yeah, thank you very much, guys. And sorry again for the inconvenience that we had in the very beginning of the live coverage. Thank you, Johai. Thank you,
Thank you very
Valeria,
much.
for your
You're welcome.
valuable information. And see you next time.
Okay, see you all. Bye bye.
Okay. Thank you,
Bye.
everybody, for being with us. I will see you next live coverage. I think will be on the US GDP next Friday thing. So thank you very much and have a good day. Bye bye.
Okay. Ciao. Bye bye.
Ciao, hi, ciao.